Hey everyone, and welcome back to Investing Talk Podcast. Sometimes it feels like the stock market is speaking a whole other language.
It really can.
So today we're going to try to break down some of that financial jargon together.
Sounds good.
We're going to be taking a look at INTR Co.,
Yeah.
digital bank that's making some pretty big waves in Brazil and beyond, right?
Definitely, yeah.
It's actually listed on the Nasdaq, ticker symbol INTR.
That's right.
So it offers investors a bit of both, that growth potential, plus that emerging market exposure that people are always looking for.
Mm-hmm.
But the question is, how's it navigating the current market volatility, especially with all the ups and downs we've seen with tech and growth stocks recently?
Yeah, that's a really good question. Even though we're not seeing a ton of headlines about Inter & Co. specifically right now,
Right.
broader market trends and the company's overall progress are still shaping how its stock performs.
Okay, so it's all about the bigger picture, even when it seems quiet. So where do we even start with this? What are the key things investors should be paying attention to?
Well, earnings season is always a good place to start. Inter & Co. probably released their Q4 2024 earnings, I want to say early 2025.
Okay, yeah.
Now, even without the exact numbers in front of us, there were definitely some key things that investors would have been watching really closely.
Like what?
Well, first, revenue growth. You always want to see how much a company is expanding, right?
For sure.
Then there's net interest margins, which is basically the profit a bank makes on its loans.
Okay.
And then with interest rates going up like they have been, everyone was curious how that would impact Inter & Co.'s bottom line.
Yeah, that makes sense.
And last but not least, customer acquisition. How many new users are they getting on their platform? Because that's a strong sign of future potential.
So if they're exceeding those expectations, that'd be good news for the stock. And if they're falling short, well, maybe not so much.
Exactly. But here's the thing. Even with a great earnings report, those broader market trends can really influence a stock's price.
Okay, so let's talk about those market trends. You brought up interest rates. What's the big deal there?
Okay, so imagine this. You have some money in a savings account. As interest rates go up, you earn more interest, right?
Yeah.
Well, it's similar for banks. When those rates climb, they earn more from the loans that they give out.
Okay, so higher interest rates, more money for the bank. But I feel like there's a but coming.
Oh, there definitely is. Because on the flip side, higher interest rates mean it's more expensive for people to borrow money.
Oh, right.
So they might put off buying a home or expanding their business, and ultimately that could slow down the economy.
Yeah, I see what you mean.
Which can be tough for companies like Inter & Co. that depend on people taking out loans.
It's almost like a double-edged sword, right?
It really is.
Okay, well, what about the impact of the tariffs? How do they figure into all of this?
Oh, good point. Remember President Trump's tariff plans on things from Mexico, Canada, and China?
Mm-hmm.
Well, those tariffs could potentially lead to inflation, which in turn could make the U.S. dollar stronger.
Which would be great for Americans traveling abroad, but maybe not for companies like Inter & Co. that are earning money in Brazilian real.
Exactly. Because when they try to convert those earnings back to U.S. dollars, a weaker real means their profits look smaller.
Yeah, that makes sense. So it's
Yeah.
another thing to keep an eye on with their financials.
Definitely. And on top of all of that, the entire fintech sector has been facing a bit of scrutiny lately. For a while there, investors were super excited about rapid growth in fintech. But now the focus is shifting a bit.
So it's not enough to just be growing quickly anymore. Profitability is becoming key.
Yeah, you got it. Investors are prioritizing companies that are already turning a profit instead of those that are still spending a ton to expand.
And that shift is affecting the whole sector, even Inter & Co.'s competitors like Nubank, which also does business in Latin America.
Exactly.
So even if Inter & Co. is killing it, if a competitor like Nubank is struggling, it could make some investors nervous. It's all interconnected, isn't it?
Unfortunately, it is. That's how market psychology tends to work.
Okay, so we've got a lot of uncertainty swirling around. But you mentioned earlier that the growth of digital banking is actually a positive for Inter & Co. in the long run.
It is, absolutely.
Yeah.
So despite all these short-term challenges, the move towards digital banking is a huge advantage for them in the long term, especially in markets like Brazil, where a lot of people still don't have good access to traditional banks.
Right.
So yeah, while the current market might be a little bumpy, the company is in a good spot for the future as more and more people start to embrace digital banking.
Okay, so we've got the background, but let's get into the specifics of the stock itself. Ready to dive into some technical analysis?
Absolutely.
Awesome. So let's start with the stock price. As of March 3, 2025, INTR Co. is trading at about $5.47,
Right?
and that's down from its all-time high of $7.84, which was back in August of 2024. Quite a drop.
Yeah, it has been a volatile year for Inter & Co. But remember, volatility can create opportunities as well.
That's a good point.
So to get a better sense of where the stock might be heading, let's look at some technical indicators. First, moving averages. Those are basically trend lines that smooth out the stock's price movement so we can see the bigger picture a little better.
Okay, so what are these moving averages telling us about INTR Co. right now?
Well, the 50-day moving average, which is a short-term indicator, is kind of hovering between $5.50 and $6. So that suggests a bit of downward momentum in the short term, what we call bearish momentum.
Okay.
But the stock is still trading above its 200-day moving average, which is a longer-term indicator. So this suggests that the longer-term uptrend might still be in play.
So short term, maybe a little shaky, but long term, there's still potential there.
Yeah, that's a good way to put it.
Okay. What else should we be looking at?
Well, another important indicator is the RSI, the Relative Strength Index. Think of it like a temperature gauge for the stock. Right now, Inter & Co.'s gauge is reading normal, somewhere between 40 and 50. This means the stock isn't excessively overbought or oversold. It's basically taking a breather.
So no need to panic, but also no clear signal to buy or sell just yet.
Exactly. However, there are some important levels to watch.
Okay, like what?
So we've got support around $5 to $5.50 and also around that 200-day moving average.
Right.
Now, if the stock drops below these levels with a big jump in trading volume, that could mean there's more selling pressure coming.
Right, so that would be a bad sign.
Yeah, it could be. But on the flip side, if it bounces off these levels, that could be a good buying opportunity.
Interesting.
Then there's also what we call resistance, kind of like a ceiling for the stock. And that's around $6.50 to $7. If it breaks above that level with strong volume, it could mean a new upward trend is starting.
This is starting to make sense. But what's the bottom line for investors? What does all this actually mean for someone who's thinking about buying, selling, or holding Inter & Co.?
Well, as of March 3rd, 2025, the recommendation for Inter & Co. is to hold.
Hold. So we're not jumping in to buy, and we're not rushing to sell. We're just watching and waiting.
Exactly. The stock is in what we call a consolidation phase after that big run-up it had in 2024. The momentum is neutral right now, and we need to see stronger positive signals before making a move.
So we're waiting for a clearer signal. Got it. Now, before we move on, can you quickly remind us about those specific buy and sell scenarios you mentioned earlier?
Absolutely. So the buy scenario, that would be if the stock drops to $4.50 to $5, but there's strong buying volume, and that RSI, remember our temperature gauge, is nearing 30, which is getting into oversold territory.
Okay, yeah.
That could be a good opportunity to buy in, hoping for a rebound.
And what about the sell scenario?
So that would be if it breaks below that 200-day moving average, again with high volume, and the RSI dips below 40, that could mean there's further downside risk, so it might be time to think about selling.
Okay, I'm taking notes here. So we've got this company, Inter & Co., a digital bank in a growing market. It's definitely showing potential, but we're playing it cool for now, watching those key levels and waiting for that clearer signal.
Exactly.
This has been incredibly helpful. Now, I know we need to dig deeper into the broader market uncertainties surrounding Inter & Co., so stay tuned.
Sounds good. It's always a balancing act, right? Managing risk while you try to maximize that potential reward.
Right. And speaking of risk, let's talk about the elephant in the room, that broader market uncertainty. I mean, we just finished a pretty volatile February. The Dow dropped like 750 points in one day. Tech stocks took a hit. It feels shaky out there.
It really does. And that's exactly why this hold recommendation for Inter & Co. makes a lot of sense right now. There are just too many unknowns, especially on that macro level, to really jump in and make any big moves.
So for our listeners who might be feeling a bit uneasy, what are some of the big questions that investors are grappling with right now?
Well, at the top of the list is probably what the Federal Reserve is going to do next with interest rates.
Right.
Are they going to keep raising them to fight inflation, or will they maybe pause to try and avoid pushing the economy into a recession?
Yeah, that's a big one.
And the answer to that question is going to have a huge impact across the whole market, including fintech stocks like Inter & Co.
And then there's the tariffs. Are they actually going to happen? What impact are they going to have on global trade and all those currency markets?
Exactly. It's a waiting game right now. And for a company like Inter & Co. with business in both the U.S. and Brazil, that uncertainty just adds another layer of complexity.
So Given all this uncertainty, what are some signs that investors should be watching for to get a better sense of where Inter & Co. might be headed?
Well, first, keep a close eye on how the overall market is feeling, the overall sentiment. If those big indices like the S&P 500 and the Nasdaq Q start to stabilize and rally, that could create a better environment for growth stocks like Inter & Co. to rebound.
So a classic rising tide lifts all boats scenario.
Exactly. But on the other hand, if the market keeps going down, even a company with strong fundamentals like Inter & Co. could get caught up in the selling.
Okay, I got it. What other signals should investors be watching?
Pay close attention to anything Inter & Co. themselves are saying, news and announcements. Are they gaining more market share in Brazil? Are they expanding their operations here in the U.S. successfully?
Uh-huh.
Any kind of positive news coming directly from the company could really boost investor confidence and potentially push the stock higher.
Even in a shaky market, good news can really help a company stand out.
Definitely. And don't forget about the competition. Keep an eye on how other Latin American fintech companies like Nubank are doing. Are they facing similar problems, or are they finding ways to do well in this environment?
Right, because investing is all about relative performance, how one company stacks up against its peers.
Exactly. And finally, don't lose sight of those long-term trends that are shaping the whole industry. Is the move towards digital banking speeding up? Are consumers becoming more and more comfortable managing their money online? Because those trends are really good for Inter & Co.'s future, no matter what those short-term market ups and downs might look like.
Okay, so we're watching the overall market, specific news from the company, how their competitors are doing, and those big industry trends. Got it. But let's bring this back to the individual investor for a minute. If someone's listening to us right now, thinking about putting some money into Inter & Co., what does this all mean for them? Should they buy now, wait, or even think about selling?
Well, that's the million-dollar question, isn't it?
It really is.
And the truth is, there's no easy answer. Investing always has a certain amount of risk and uncertainty. Here's how I like to think about it. Imagine you're sitting at a poker table. You've got a decent hand, but you don't know if it's the best hand at the table. So do you go all in? Or do you wait and see what everyone else does?
Okay, I like this analogy. So in this case, Inter & Co. is our decent hand.
Right. They've got a lot of potential, a good track record, and they're working in a market that's growing. But there are still those unknowns on the table, all those market risks we've been talking about.
So we're not folding, we're just being a little bit strategic.
Exactly. We're gathering more information before we decide what to do.
So for someone who already owns shares of Inter & Co., what would you advise them to do?
Well, if they believe in the company's long-term potential and they're comfortable with a little bit of risk, they might choose to hold on to their shares and see what happens.
Okay, and what about someone who's thinking about buying Inter & Co. for the first time?
They might want to wait for a better price, a more attractive entry point. Remember those technical levels we were talking about earlier? If the stock dips down to $4.50 to $5 and there's strong buying volume, that could be a good time to buy in.
Makes sense. And what about the investor who's thinking, you know what, this is too much risk for me, I'm out?
That's totally fine. Investing is personal, and it's all about managing your own risk tolerance. If someone's feeling nervous about the market or they're not sure about Inter & Co.'s future, selling their shares and moving to the sidelines might be the best move for them.
So at the end of the day, it comes down to weighing those potential rewards against the risks and making a smart decision that fits your personal situation and your investment goals.
Exactly. And don't forget, the best investors are the ones who stay calm, they stay rational, and they don't let their emotions control their decisions, even when the market feels crazy.
Keeping a cool head is so important. Now, I know we've talked about a lot already, but is there anything else we should cover about Inter & Co. before we wrap things up?
Actually, yeah, there's one more really important thing that we haven't talked about yet.
Okay, I'm intrigued. What is it?
Sentiment. Investor sentiment.
That elusive feeling in the market.
Exactly. It's all about how optimistic or pessimistic investors feel about a certain stock or the market as a whole.
So how can we gauge investor sentiment when it comes to Inter & Co.? Where should we be looking for clues?
Well, we can find clues in a few different places. One is social media. What are people saying about Inter & Co. on places like Twitter, StockTwits, or Reddit? Is the chatter mostly positive or negative?
So we're talking about checking out those online forums, seeing if people are buzzing about Inter & Co. in a good way or a bad way.
Exactly. Analyst ratings can be helpful too. Are analysts upgrading or downgrading their outlook for Inter & Co.? Are they recommending people buy, sell, or hold? These reports can give you some insight into how professional investors are feeling.
And of course, we always have to take those analyst reports with a grain of salt.
Oh, absolutely. Analysts don't always get it right. They're just sharing their opinions based on their research.
Now, what else should we be paying attention to?
Keep an eye on the news. Are there positive or negative articles being written about Inter & Co? Is the media coverage generally good or bad? Basically, we're looking for anything that might signal a change in how investors are feeling, whether they're becoming more optimistic or more pessimistic.
It sounds like sentiment can be a pretty powerful force in the market.
It absolutely can be. If enough investors think a stock is going up, it can actually become a self-fulfilling prophecy. And the same thing can happen on the downside. If enough investors think a stock is going down, their actions can create a downward spiral.
So we have to be mindful of sentiment, track how it's changing, and factor that into our overall analysis.
Exactly.
This has been a really fascinating look at Inter & Co. We've covered their recent performance, all those challenges in the broader economy, the state of the fintech industry, the technical analysis, what the experts are saying, and now even investor sentiment. Is there anything else we need to think about?
Yeah, I think we've touched on all the important stuff.
This has been so insightful. I feel like we've really explored a lot about Inter & Co. and where they stand in the market.
Yeah.
So let's kind of bring it all together for our listeners. Given everything we've talked about, their recent performance, those macroeconomic headwinds, the whole fintech landscape, the technical stuff, what experts are saying, and even investor sentiment.
Yeah.
What's the one key takeaway that you would leave our listeners with about Inter & Co.?
That's a good question. Honestly, the most important thing I can say is do your own research.
Okay.
Don't just take our word for it.
Yeah.
Read the company's financial reports, keep up with industry news, talk to other investors, and in the end, form your own opinion about the company.
Right.
Investing is personal, and the best decisions are always going to be the ones that align with your goals and how much risk you're comfortable with.
That is so good advice. Investing is not one size fits all. It's about finding the strategies and the stocks that actually work for you and your financial goals. Well, on that note, I think it's time to wrap up another fantastic episode of Investing Talk Podcast.
It's been fun.
Thank you so much for joining us on this journey as we explored Inter & Co. Hopefully you found it informative and insightful and maybe even a little exciting.
I hope so.
And remember, whether you're a seasoned investor or just starting out, the key is to stay curious, stay informed, and never stop learning.
And never be afraid to ride those market waves.
Couldn't have said it better myself.
Yeah.
And to all of our listeners out there, don't forget to subscribe to Investing Talk Podcast. Share this episode with anyone who you think might find it useful, and leave us a comment with your thoughts on Inter & Co. or any other stocks you'd like us to break down. Until next time, happy investing.